Well, hello, everyone, and thank you so much for coming to the Benjamin Z. Miller Investor Networking Group. It is just wonderful to see everyone that attended. And the nice thing is, this presentation, you are going to learn some extremely valuable and actionable content. We are going to be talking about the exciting world of mortgage note investing. This is something where you can purchase debt. You can become a debt purchaser. So what exactly does that mean? Well, we all know what a landlord is. A landlord buys real estate and then collects rent from the tenant. But who does that landlord pay his mortgage to? That landlord pays his mortgage to his lien lord, and that is what you can become if you make the wise decision to start purchasing mortgage notes. The profits can be so much higher, especially if you value your time. If you value your time, it is far more profitable to be a lien lord than a landlord. Being a landlord, theoretically, your return is unlimited because you could keep holding on to the property forever, but there's a lot of work in that. And it's something that being a lien lord has so many advantages. So let's talk about the word mortgage. It is actually just an agreement between a borrower and a lender. And the lender has the right to take the property if the borrower doesn't pay. So where did that word come from? Well, it is interesting. It comes from the Old French, and it literally, if you translate it from French to English, mort in French means dead, and gage means pledge. It means death pledge. So they named it that because years ago when people would take mortgages out, a lot of times they wouldn't live until the end of the mortgage. This was back when people died younger. So that's where that word comes from. Okay, let's take an example of a mortgage note purchase. Let's imagine that there is a mortgage, there's a property that's sold for $120,000. The buyer has put down $20,000. There's a debt of $100,000 that pays a 10% rate of interest, and the monthly payments, that works out at a 10% rate of interest amortized over 30 years to a monthly payment of $877.57 per month. So let's imagine that this deal happens and the person that purchased the property and that's making payments on the mortgage note, they are doing a great job. Every single month that they make the payment without fail, they do just fantastic. They have made 60 payments. There's a total of 300. If you take a foundation calculator out, you can calculate that the debt owed on that mortgage is $96,574. So that's the unpaid balance. And let's imagine that you are a note buyer and you demand a 12% yield on investment. You will not buy it unless you get a minimum of a 12% yield. That means the maximum offer that you could make is $83,322.39. So if that were to happen, if you purchase that note at a discount, you are getting instant equity in the note. It is fantastic. So here's an illustration that shows how a mortgage amortizes for those of you that maybe have not thought about this in a while. And you can see that in this hypothetical note, we're looking at a 4% interest rate note that's 30-year amortization. Monthly payments are $11.93. And you can see that over time, the amount of principal paid, it starts to go down really slowly at first, but then it increases. It increases. So that is how that works. Very good. Very good. What are some of the advantages of mortgage note investing? Well, folks, there are many, many advantages. First of all, it is less time and effort. That is something where if you value your time, folks, you are going to love mortgage note investing because you do a deal and then you've got years of payments. Diversification is another huge advantage. You get payments on these notes and you're owning more than one mortgage note, especially if you invest with my company, Alamo Mortgage Holdings. We have such a great program for investors, and I encourage you to check out Alamo Mortgage Holdings. You also are exposed to less risk in mortgage note investing because a lot of the things that are required, those are the responsibility of the landlord. So it's very good. What makes the value of a note? If you're going to buy mortgage notes, you need to know what makes them valuable. Well, the first factor is the buyer. If you have a buyer that has a good credit score and is a government employee with regular W-2 income, that buyer is very desirable. They're very likely to get paid on time and be able to pay you on time. On the other hand, if you have a buyer that is a self-employed person that makes living by doing some sort of thing where they get intermittent income, maybe they don't have a good credit score, that buyer is less valuable. And those two buyers have an impact on the value of an identical note. What about the collateral? Let's say that the mortgage note has, say it was written for a debt of $200,000, but say that the asset's only worth $100,000. Well, that note is not worth $200,000. The fact that it's got that higher debt. So that's also important. Also, another thing that's a factor is the buyer's down payment. Did the buyer purchase the property and put down 30%? So if it was $100,000, did they put down $30,000? Well, that's a good down payment. But what about if they only put $1,000 down? What about if they only put $500 down? That's not as good. The interest rate, all things being equal, a note that pays a higher interest rate, for example, 10%, is more desirable than a note that pays a lower interest rate, say 5%. What about the history? How has the buyer been making payments? How has the borrower been making payments? If you see that the note is third-party service, that is great. And by the way, if any of you need note servicing, I highly recommend SecureNet Loan Servicing. They are such a great company, SecureNet Loan Servicing. If you need note servicing, go to SecureNet Loan Servicing. They are fantastic. Another thing that's important is the paperwork. Was it closed properly with an attorney? Was the legal paperwork done correctly? All of these things have to be considered. What about if it's a non-performing loan? What about if the borrower has stopped making payments? Well, it's fairly simple, and here are some rules of thumb. If the asset is more expensive than $650,000 on the note, you would try to buy that at perhaps 30 to 70%. If the asset is less than $125,000, the note is less than $125,000, you would offer a very low amount, maybe 10 cents to 25 cents on the dollar. And that is just something that's so important. So how should you explain the discount to the seller? Well, you want to explain to the seller that you can't or you won't pay full price for his note because of the time value of money. And you can explain, Mr. Seller, when you go to the grocery store and you purchase groceries 10 years ago, the groceries you used to be able to buy a lot more. And the seller will agree. And you say, and it's the same thing with your note. When I receive that money in the future, it'll buy a lot less. So we have to adjust it for the present value. You also want to point out the problems. Let the seller know all of the problems that you found with the note. Maybe they didn't get a copy of the buyer's credit report. Maybe they don't have copies of the buyer's tax returns. There's all sorts of things that are problematic. So now I want to just show, what about purchasing a package of mortgage notes? And that's really the way to do it. And rather than going out there and trying to buy one note at a time, and we don't recommend that, that's not exactly a bad strategy if you just want to do this on a really small scale. But if you're trying to do something on a bigger scale, you're better off investing with a company like Alamo Mortgage Holdings, because we purchase packages of mortgage notes and it's so much easier. We do all the work for you. So here I'm going to show an example of a real package of mortgage notes for you.
So this right here is actually an example of what a portfolio of loan notes might look like. So this is actually a real portfolio. And you look here and you can see the name of the borrower, the number of months. You can see the interest rate. This this debt is actually pretty high, 14.75% is what they're paying on that mortgage. The monthly payment is $278.50. Then you can see the terms, the status, this sort of thing. So, I mean, you've got a list here, and this is an example of a package where a package of these mortgages can be purchased. This type of deal would be done by a larger investor. It would not typically be a single investor that would buy this package. For example, my company, Alamo Mortgage Holdings, this is the type of package that we might actually purchase, something like this. But if you're just starting out in investing, you might start out by, you're just going to buy one mortgage note. So for example, you might come in and this mortgage note, if you find something like this out on the market, you might try to negotiate down from, the unpaid balance at $89,570. Maybe you try to buy it for $59,000 or $69,000. But that would be one note. But you can also purchase packages of notes. And that's something that Alamo Mortgage Holdings is involved with. It's a company that's a United Kingdom company that actually purchases packages of mortgage notes. So wanted to give you an idea of what a package of notes look like. So this.
Fantastic, fantastic. So now sometimes I get asked by people, hey, I want to get into the note business. I want to get into the note business. They've heard about this and they have an idea of getting into the note business. Well, folks, unless you are willing to commit a significant amount of time and energy and money to learn the note business, you are far better off if you work with a company like Alamo Mortgage Holdings, because we are able to pay a consistent long-term income stream to you. You are getting ownership of not just one mortgage note, but multiple mortgage notes with the unique structure that we use. We offer a corporate income bond. And if you are, for example, a doctor or a dentist or a high-paid CEO and you're a few years away from retirement, Alamo Mortgage Holdings is the best solution for that, because a lot of doctors and dentists, they end up in a bad situation where they think their practice is going to be their retirement. Well, folks, it often does not work out that way. And there are many examples of doctors and dentists that sold their practice and did not achieve as much money as they thought they were going to. Maybe they had an expert give them an expensive valuation where they paid an expert to tell them how much money their practice was worth. And when they went to sell it, all of a sudden the market didn't care about their valuation and made them a much lower offer. And they took that offer. So that's why it's a good idea in life to have a backup plan. And when you start purchasing the corporate income bonds of Alamo Mortgage Holdings, you can secure that long-term passive income that you're looking for as a professional. Highly, highly recommend it. Okay, so now let's take a look at this chart here. This shows how our bonds compare to a UK gilt. Look at how insignificant the yield on a UK gilt is. I mean, and there's people that just line up to buy these. I guess they've never heard about Alamo Mortgage Holdings corporate income bonds. That is a shame, because they are missing out on hundreds of basis points and hundreds of pounds more passive income that they could get with Alamo Mortgage Holdings. But that is why it is important to look and to do that. And that's why it is so valuable if you come to these meetings, because you can learn such interesting things that are so beneficial to you. Okay, so look at this. Here is something that's going to be so interesting and so beneficial to you folks. Oh my God, we're looking at the British pound and the US dollar. Is that a car crash that I see there? Because it looks like towards the end of Bretton Woods in 1945, one British pound would buy 4 American dollars. And look, it has fallen, it's gone lower. The British pound has lost value. Now it's sunk all the way down to where 1 British pound is only equal to $1.21 US as of the 1st of January, 2023. Folks, listen, this is something that our investor friends in the UK, they battle with, because they say sometimes, well, I can get an 8% rate of return in the UK. Well, folks, I'm sure that you can. But there's a big, big difference between getting an 8% return denominated in dollars and an 8% return denominated in British pounds, particularly if the investment is a long-term investment over many years, which mortgage note investing is. So it is something where if you want to purchase a bond in pounds, we can do that. If you want to purchase a bond in dollars, we can do that. If you think that the British pound is going to continue to lose value, you may want to buy a bond in dollars, and we do that conversion for you. We make it so easy. That is something that's real important, or vice versa, whichever way, or you can do half and half. There's always a lot of options there. We've got a great team for you at Alamo Mortgage Holdings, and I encourage you to go to our website and read the biographies of our team. We have such a great team.
So Alamo Mortgage Holdings is an example of a company that actually purchases packages of mortgage notes. So this company is my company. There's several team members that work at this company. And, with this, what we are focused on is actually purchasing packages of mortgage notes. So within the mortgage note business, you've got kind of two categories. You've got people that are buying notes as an individual, and then you have people that are actually, institutions that are buying notes. The thing that's nice about Alamo is if you're interested in note investing, but you really don't have the time to sit there and figure out all of the details on how it works, and you just are in a position where you want to deploy capital, we actually offer a bond that is £100,000 bond where it can be purchased. You can place anywhere from £100,000 to £1 million easily and conveniently. And then that money is actually deployed into purchasing mortgage notes, exactly like the package that was shown. And you've got an entire team that is supporting that to make sure that it is fully backed up. So I hope that helps. I hope that you learned something about mortgage note investing. And that is the end of the presentation. So,
all right, so that's how that works. And just a couple of announcements for the group. First, I want to ask everyone to please take the time to fill out the sign-in sheet. And then second, if you have any friends or colleagues that would benefit or be interested in this, please feel free to invite them to our next meeting. We have a meeting every Sunday. So very good, folks. Okay, now I'm going to open it up for any questions. And I am so happy to see everyone. I wish you all a fantastic day.